Good afternoon. Welcome to daily currency update from the currency desk. On Friday, we witnessed the US dollar strengthen very firmly against the Indian rupee. Overall, we saw a weekly gain of around 0.5% in the US dollar. On Friday, after the markets closed on the US front, we had the non-farm payrolls data, which was much better than expected, and along with this, we had the previous 2 months data, which were revised upwards. So this data added to a great extent to the dollar strength. We have the USD index currently trading at 80.85 levels, which is its high for the current for around a month. So we are seeing some great strength in the US dollar against the global peers as well as Indian rupee. We had the ISM manufacturing index and the consumer confidence data for the US, which were also much better than expected. Also, if we see the global scenario currently, the US elections have brought in some amount of uncertainty, and due to this, people are preferring some safe haven assets to invest in. So based on this, there is some risk averse sentiments which have developed, and we are seeing people invest more in dollar denominated assets. So all in all, we recommend that you can buy dollar at current levels with a stop loss of 54 in the spot. Currently, dollar has also crossed a very crucial resistance level, which is at 54.35. So the trend seems to be bullish for the dollar right now, and the next resistance on the upside would be 54.72. In terms of euro, we saw the euro weakening based on the uncertainty on the Spanish and the Greece front. So these already weakened economies are continuously giving some instability signals. So due to this, we have some greater uncertainty going on in the euro. Also at the same time, we had some positive US data, which again took its toll on the euro value. We have the euro against the US dollar falling below the 200-day moving average, and currently is trading at 1.278 levels. Also next month, this week, we have the ECB meet. In the ECB meet, there is a strong statement expected as regards to certain clarifications in the OMT program, and as well as a formal bailout package on for the Spanish front. So if there is no major announcements in this respect, we could see the euro fall further, that is up to 1.25 levels against the US dollar. But yes, against the Indian rupee, it is currently holding strong. This is mainly because of the weakness in the Indian rupee. Currently, we recommend a sell only below 68.97 levels. Till then, no short position should be initiated. In terms of pound, there was no major news triggers or data. So all it could do is only move in terms of the euro and in the direction of the euro. We would see a range bound trading in the pound this week until the time of Bank of England meeting. Hence, currently we recommend a buy above 87 levels in the pound. In terms of Japanese yen, we have the US positive data of non-farm payrolls and consumer confidence affecting the value of Japanese yen. So Japanese yen is continuously depreciating against the US dollar, but yes, against the Indian rupee, it is holding very strong. This is mainly because of the weakness of the Indian rupee. So we could see some upside movement in the Japanese yen against the Indian rupee, which would be contrary to the movement of USD JPY, wherein we could see the levels of 81 being reached in the current week. In terms of Japanese yen, we currently recommend a buy with at current levels with a stop loss of 67.90 in the spot levels.